Gold and oil, yes, they have been moving very quite volatile. They've been moving very much so, a lot, depending on what's going on in the world, whether it's a war in the Middle East, whether it's that chaos that we've had in the markets with respect to trade negotiations, trade deals, tariffs, trying to cut taxes in the U.S. You name it, we've seen pretty much all happen in the first half of this year. And yes, it affects the U.S. economy. It affects the U.S. dollar more so. And as we know, price of gold, price of oil, definitely affected by the U.S. dollar. Gold more so than oil, although they're both priced WTI, obviously, in U.S. dollars. And you can clearly see here, we'll show our first chart on WTI. So this would be, actually, sorry, we're going to show our gold first. My apologies. We're going to show our gold chart here, and you can see how gold has fared in the past month. When we started to hear that trade negotiations were happening, then we are started to see on the left side of this chart, the price of gold start to fall. When we started to hear a bit of chaos with respect to trade, gold prices go up. We had obviously a war in the Middle East. Gold prices spiked. That was beginning of June, or say mid-June. And since then, there seems to be now a calm. Obviously, we have a ceasefire right now. It's still holding. No one seems to be wanting to go against that. And that ceasefire has been, I guess, a good thing for the markets, for the U.S. dollar strength, gold weakness, U.S. economy, as well as stock markets around the world benefiting from a stable, I guess, geopolitical situation, stability in the Middle East, and that just brings the markets higher. So we've seen gold really fall off by quite a bit in the last, let's call it, few weeks. Our next chart is on oil. I jumped the gun a little bit there. Our next chart, WTI crude. And again, you can see how much of a premium was built into the price of WTI, or oil per barrel. It's hard to always guess how much of a premium is built in because of the war, but you can clearly see oil getting above or in and around $75 and now pulling back to in and around the low 60s, $64. And as I've said on our show many times, I would not be surprised to see oil prices fall below 60 once again. There's a lot of energy, a lot of oil out there in the world. OPEC continues to produce at a higher level. U.S. is producing over 13.5 million barrels a day. There never, or I guess there never was, or there doesn't look to be in the future, a slowdown by Iran or some of the other OPEC nations. The Straits of Hormuz, where 20% of the world's oil flows through that strait, that little narrow piece of water that is in the Middle East area, that Iran could easily try to put a barricade there to stop oil from flowing. It never happened. And even though I guess they scared everybody by threatening to do it, they never actually did it. And oil has been flowing ever since and getting to where it needs to get to, places like India and China and all over the world. Our next chart is Brent crude. So this is the price of oil in Europe, and very similar chart to the chart of WTI. You can see it spiking higher because of the war and coming straight down once things started to calm down. So as I've mentioned many times on our show, as I mentioned on BNN, when I was on BNN recently, if you are a person that is investing in gold, investing in oil, I think you need to keep one eye on the yellow metal or the price of oil, but the other eye on what's going on in the U.S. If the U.S. can now, they negotiated a ceasefire in the Middle East. If they can get some trade deals done, U.S. China, U.S. Canada, U.S. Mexico, if they can get a trade deal done with the EU. So if they can do that, I believe U.S. economy, U.S. stock market will move higher, U.S. dollar will move higher. Not good for the price of gold, as an example. If they can get through, and I think they will, in some form, there's big, beautiful bill through Congress. Once again, I think that's a good thing for the U.S. dollar, for the U.S. stock market, for the Canadian stock market, but not good for the price of gold. So if you own gold today, I think you should have one finger on the sell button, because you may want to take some of that profit if we should see some a positive situation with respect to trade negotiations in the United States. And last, obviously, the price of oil. As we see production ramp up again, OPEC nations, the United States continues to ramp up production. I think the price of oil will continue to fall. And I think that is what President of the United States wants to see to combat or at least fight against a rise in inflation.